Run, 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 run.
Run!
Run, 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 before your money will burn in the sun. Hello, boiled frogs. Have you ever heard of expiring money? It is another exciting proposal from the World Bank, which is famous for doing things for our own good.
For our own good. Is it?
Sounds great, right? Well, keep watching to find out how this brilliant idea could potentially ruin your life and destroy the economy as we know it. Are you sick and tired of having too much money in your wallet? Well, have we got the solution for you? Introducing Expiring Money, or Demurrage, a monetary policy tool that will make all your money disappear after a certain period of time. In October 2020, the people of Shenzen, a big Chinese city, were treated to a delightful surprise. Free money!
Free money!
Well, sort of.
Of sorts.
The Luohu district of Shenzen decided to give away 10 million digital yuan to about 50,000 lucky recipients. Each person received a generous 200 digital yuan, or roughly $30, which they were able to spend at designated shops in the district between October 12th and 18th, 2020. But here's the catch. After the expiration date, the value of the digital yuan would drop to zero. Poof! Gone. Just like that.
Your money is gone.
Expiring money is a potential monetary policy tool that is peddled to encourage people to spend money rather than hoard it. Because if money is going to expire eventually, people will be more likely to use it rather than save it for a rainy day. Who wouldn't want to rush out and spend their hard-earned cash before it disappears into the ether? In Shenzen, the use of expiring money was made possible through programmability, or the ability to design and implement complex financial transactions using computer code. Digital central currency, such as stablecoins, can be programmed to automatically expire after a certain period, because nothing says smart money like a digital currency that disappears into thin air.
It has disappeared into thin air.
Of course, who promotes this idea? World Bank and many governments around the world do so by trying to highlight its positive aspects, which, in a way, can sound plausible.
Sounds plausible.
One of them is that the concept of expiring money could be very useful for central banks and governments distributing aid to people during severe recessions or events like calamities and pandemics.
What does that remind you of?
When higher uncertainty makes people spend less. Because nothing says confidence booster like receiving a bunch of money that you have to spend in a week or lose forever. Oh boy, what a fantastic idea. Let's take the money that people rely on for their daily needs and give it an expiration date. That will surely encourage them to spend it rather than save it for a rainy day. Because who wouldn't want to rush out and spend their hard-earned cash before it disappears into the ether? But wait, it gets even better.
And it gets even better.
We can use central bank digital currency, CBDC, a digital form of money issued and backed by a central bank, to implement this brilliant plan. CBDC can be used for all sorts of financial transactions, like making payments and transferring money, and since it's digital, we can program it to expire after a certain period, like 1 week.
How convenient.
CBDC is just like all of those pesky cryptocurrencies that we already use, like Bitcoin, Ethereum, and Dogecoin. You know, the ones that give us the freedom to choose how we save, use, and trade our money. But with CBDC, that freedom would disappear faster than a Bitcoin transaction, because unlike cryptocurrencies, which are decentralized and controlled by the people, CBDC will be centrally controlled, organized, and regulated by the government, just like any other type of money. So, basically, CBDC would take the best thing about cryptocurrencies, decentralization, and get rid of it. The control would no longer be in our hands. It will be given back to the government and the most powerful people and corporations in the world. No longer would it be a tool of the people. And don't worry, this idea is still being explored and debated, because it's not like we need to consider the potential benefits and drawbacks of using expiring money as a monetary policy tool or anything. I mean, what could go wrong?
What could go wrong?
But the benefits of programmable money go beyond just expiration. Digital money can be programmed and can provide a lot of benefits for us, especially low-income people and middle classes. Let's see how we can enjoy this wonderful idea. Programmed digital money can reduce incentives to save. One of the main benefits of using money is that it allows people to store value and use it in the future. By imposing a time limit on the use of money, expiring money could reduce the incentive to save and invest, which could have negative long-term consequences for the economic growth and stability. But who cares about long-term stability when we can just spend all our money now and worry about it later? Have negative impacts on certain industries. Expiring money could have negative impacts on certain industries, such as those who rely on people saving money for future purchases, such as the housing market. But who needs to buy a house anyway? We can just rent forever. Potentially create confusion and mistrust. The use of expiring money could create confusion and mistrust among the public, particularly if people are not fully informed about how the policy works and the potential consequences of not using the money before it expires. But hey, a little confusion and mistrust never hurt anyone, right?
I'm confused.
Having negative impacts on the poor. Expiring money could disproportionately impact low-income individuals and households who may not have the means to spend the money before it expires. But hey, the poor always get the short end of the stick anyway, so why not add expiring money to the mix?
Yeah, you're getting the short end of the stick, all right.
Anyway, there are also positives. For instance, a complex implementation. Implementing a policy of expiring money could be complex and require a significant amount of resources and infrastructure. This could be especially challenging in countries with less developed financial systems. But hey, if it's not impossible, it's not worth doing, right?
Don't do it! It's not worth it!
It is important to carefully consider these potential cons before implementing expiring money as a monetary policy tool. But let's be real. Who cares about potential drawbacks when we can just blindly rush into a new policy without thinking it through?
Who cares? Who cares? Who cares?
While these innovative financial tools may have the potential to simulate economic activity and promote growth, it is important to carefully consider the potential consequences and impacts on individuals and society. We encourage you to stay informed about the development and implementation of CBDC and the future FedNow service, and speak out and advocate for the freedom to choose how you save and spend your money. Don't let central banks or governments dictate the terms of your financial transactions. Fight back for financial freedom and choice.